Hi everyone, welcome to EVE Talk, your weekly look at the EVE Online markets. I'm your host, delonewolf, and it looks like the migration of Dust 514 has been quite successful. There was even a patch needed for the EVE Online client, so that's very nice. And yeah, since I'm in a wormhole, I haven't really seen a lot of it, but I have seen a first duster in the help channel yesterday, so it's really cool to be able to interact with guys on the PlayStation 3. The idea alone is pretty entertaining sometimes, but we're here for the market, so let's head over there to the quick bar and start off as always with the low-end minerals. A quick look at what Tritanium is doing. Finally we get a decent chart for Tritanium. That's been quite a while. Let's see, dropping below 6 ISK after a small uptick around the launch of the expansion. So some of these data points are pretty damn low, and the 20-day moving average is moving back down towards or below 6 ISK. And let's have a quick look at the prices. We have a 598 in station. Let's see if 599. Yeah, so just below 6 ISK for Tritanium. Maybe up 1 or 2 cents from last week, but nothing dramatic, and still around 6 ISK, as it's been for quite a while, although I think it's been above 6 ISK. Yeah, during the summer it's been almost towards 7 ISK, but overall this is a pretty stable price. Let's have a look at pyrite. Again, we can see this slow ascent towards 12 ISK around and before the expansion, but now it seems to have stabilized. So let's have a look at the prices in station. 14 ISK, 13.99, 14.0, 13.91 for the buyers, so no margin whatsoever. Looks like a correct price, and yeah, actually a higher price than it's been in a year, so that's a bit surprising to me, but pretty interesting. Moving on to Mexalon, which might move a little bit. Whoa, quite a bit more variation over the years. We're finally getting some clear charts, so that's good news as well. Where it's been holding on above or around 60 ISK for quite a while since the summer. We also see this uptrend during the expansion, or with the run up to the expansion, but now the Mexalon has fallen back quite a bit towards 55. So that's a bit surprising. Let's have a look at prices. Yeah, 54.85, 54 ISK. Pretty interesting. It's been, I think, 64, something like that, quite regularly over the summer. So this is a bit surprising, and this does mean that if you're mining Plagioclase, this means that you're mining less efficiently now, by quite a lot actually. A 10 ISK difference compared to this summer. That's not nothing. So yeah, you might be looking at maybe going for some scordite, which is pyrite heavy with Tritanium. Let's have a quick look then at the Isogen chart. Also pretty big run up over the expansion. A bit of a correction now, which seems to be the general trend, but overall still high prices on the 1-year chart. And I would say, what are we looking at? Heading towards 150 ISK for Isogen. A quick look at Megasite. That's of course a bit of a weirder chart because of that huge spike in April, but maybe a bit earlier we can see an uptick here in Megasite, which I could still attribute to the run up to the expansion, and then stable with a bit of a downtrend, a bit of a correction at the end once again. Noxium, what's that one looking like? Yeah, pretty much the same again. More extreme run up towards the expansion at around that 1 December point, and then a bit of a correction again. But Noxium has recovered quite a bit from its low below 500 and is now back towards 800, maybe 750. It's probably the price it might settle down to on the medium term here. But again, we can see from after the summer that same pattern of a run up towards the expansion, and then a bit of a correction after the launch. So that's pretty interesting for the mineral market. I would say still holding up quite strong, but a natural correction after the run up towards the expansion. And this does indeed mean that for manufacturers that buy their minerals, the margins are quite low, but maybe increasing a bit now with the correction. Let's have a quick look at some Tech 1 chips then. The Drake is similar to the minerals, which can be expected, of course, run up towards December, holding on, and you can see the 5-day moving average dropping back down a bit, but it's nice to see it's nice to see the Drake hold up above 50 million again. Buy orders 47,800, so not much of a margin either. But yeah, the Drake knew a bit of a downtrend during the summer with the expected nerf of heavy missile launchers, but has recovered quite nicely. Let's have a look at the Maelstrom. Less pronounced uptick here towards 1st of December, and once again a bit of a correction, but holding on quite nicely above 200 million ISK. So Tech 1 manufacturers, well, they have a bit of a choice to make at this point, I would say. Do they think that some serious changes are going to be coming that might increase their margins? I don't know, but at the moment Tech 1 prices are mirroring the mineral prices quite heavily, so I don't expect a big jump in margins for Tech 1 production. Personally, what I would do myself is focus a bit on battlecruiser production, which are the next ships in line for some rebalancing, and that could possibly mean that these will have an increase in price at some point once we get more news or once the rebalancing gets launched. But at the moment, yeah, the Tech 1 market is in a bit of a stalemate because of how stable mining has become. Moving on, Tech 2, let's have a look at the Guardian charts. Still quite stable actually, surprising after all of these variations we saw last year. 119,000 for the buyers, 1 million for the buyers, 127 million for the sellers. So at least there's a bit more margin here, 7 million. That's good that the margin is still going up and down a bit. But really, I would wait for at least a 10% margin, so 10, 12 million, something like that makes it a lot more trade-worthy than the current, which is only halfway there. So yeah, I wouldn't view the Guardian as trade-worthy at the moment. Let's have a look at the other logistics just to get an idea here. There you go, that's a lot better. 131 for the buyers for the Oneros, almost 140, so that's 9 million. That's coming a bit closer. Let's have a look at the Scimitar. 125, 138. There you go. Scimitar looking pretty good for a margin. 12, 13 million ISK even. That's around 10%. There's definitely, in my opinion, some money to be made in the Scimitar market at the moment. How is the Basilisk doing? 125, 133 again. 13 million ISK. Margin not bad, I would say. Yeah, Basilisk and Minmatar are my Tech 2 trading picks for this week, that's for sure, considering these higher margins. Maybe a quick look at their charts. Yeah, back on a bigger upswing. It's been pretty stable here as well during the expansion, but right here at the 5-day moving average you can see a serious spike. So yeah, Tech 2 still an interesting market. It's been a bit more stable over the expansion, but you can still find some trade opportunities in my opinion. And for this week the Basilisk and the Scimitar look like good picks. Let's move on to the Tech 3 markets, since I'm in a wormhole right now. What are the melted nano ribbons doing? Quite a lot of variation, but still overall maybe a bit of an uptrend there. 5.7, 5.8 million for the sellers, 5.56 million for the buyers. Not a great margin. But I think prices are a bit above what they were last week, and it's good news for us. Of course, we have a decent amount of nano ribbons, which are valued at 5.5 million by the system at the moment. So actually our profits might be a little bit higher from our wormhole experiments, which at this point, just a bit of a spoiler, but might be interesting. We're on day 12 and we've broken even, so all our investment for POS, fuels and all the extra ships we've brought in there, they're already covered by the loot we've made. Let's have a look at the Loki. What's that one looking like? Pretty much the same, bit of a downtrend overall over the year, but it's looking like it's working hard to recover with quite a bit of variations on the 5-day moving average, up and down below that 20-day moving average green line. But yeah, it's working its way back up. Let's have a look at the Tengu then, which is, well, still that general downtrend is clearly seen, but it's also here moving a bit back up, although that 5-day moving average is moving down significantly at this point again, quite clearly. So it might just be that there's not as much demand for the Tengu anymore. We'll have to wait and see. Obviously the Tengu has also had to contend with the heavy missile nerf, which has quite an impact as well. Quick look at Technetium, still the same. Caliente fuel blocks, still the same, although some strange data points there. But overall, yeah, once again, unless CCP comes out with some news, I don't expect this to change in any significant way. Let's move on to Plex, which is, well, moving down, but the 5-day moving average went back up, and that slowed down the descent on the 20-day moving average. Let's have a look at prices in station 567, 556. So that's 11 million margin, pretty much normal for Plex, and just a bit up from its bottom, but nothing too serious at the moment either. Personally, if I were in wormhole space, I would probably buy 1 or 2 Plex for the medium term. I think you could, if you buy them now, at some point by this summer, I expect that you'll be able to sell them for 600. So yeah, overall it's still holding on, and the downtrend is good news for people that want to fund their account with Plex. But it's going to be holding on. 560 might be that new bottom I'd been talking about so much. Interesting market, and you can clearly see though on the 1-year chart that we're talking about a new bottom. Even if it drops to 540, 550, it's clear that there's a new bottom, which in general can be a sign that general activity in EVE Online has increased substantially, thus making the average amount of gameplay you have to, of ISK, and thus gameplay you have to pour into one Plex quite a lot higher than it was last year, where, well, 460 maybe was the low point there. 560, 100 million increase there. Yeah, in my opinion, the higher the Plex price, the healthier EVE Online is, because there's quite a lot of competition for buying them. Of course, for people that fund their account with Plex, that's not such good news, but for the general health of EVE, I do see this as a good sign. And yeah, we are seeing this pull back after the run up towards the expansion, which is good news for people, of course, as well. It just came quite a bit delayed from what I had expected, and it does look like the chart has to work its way back a little bit, because it wasn't visible at all when the expansion launched, but right now, working its way back towards December 1st, you can see that the launch of the expansion was the trigger for a correction on the Plex. So yeah, I wouldn't have bought at the expansion at the moment. I would probably buy a few. And there you go, guys. That's our weekly look at the EVE Online markets. I'll see you all next time.